Welcome back to The Explainer, where we take complex market intelligence and turn it into your strategic advantage. Today is Monday, August 17th, 2026. And wow, the global polymer trading floors are flashing red, green, and honestly everything in between. We're looking at a market that is deeply conflicted right now. If you're trading resins, you need to know exactly what's happening on the ground in China today, because those ripple effects, they're going to hit global supply chains by tomorrow. So let's just get right into the action. Mixed cost supports, plant maintenance shutdowns, and cautious downstream buying. That right there, that's the overarching theme of today's market. It is a massive stalemate. You've got mixed cost supports trying to push the market one way, major plant maintenance shutdowns constricting supply and yanking it another way, all while downstream buyers are literally just sitting on their hands, acting incredibly cautious. If you want to understand why prices are acting so bizarrely this week, this tension is exactly why this explainer matters today. And by the way, all the data we're unpacking today comes directly from Polymer Bazaar. They are a highly trusted source for daily market intelligence, pricing, and predictions, and they have their finger right on the pulse of the industry. Okay, let's dive into this and look at the macro forces currently dictating the global bazaar. So picture this like a giant tug of war. On one side, you've got rising oil-based costs. Crude oil gains are providing this undeniable baseline of cost support across almost the entire spectrum of commodities. In theory, that should absolutely drive prices up. But on the other side of the rope, we have cautious downstream buying. End users are just not placing massive orders right now. They're waiting, they're watching, and it creates this massive supply and demand tension. All right, let's break down the polyolefins and vinyls markets, looking closely at spot and futures. Taking a look at polyolefins, PP spot is sitting at 9,100 RMB per metric ton, with September futures trailing at 8,449. Traders here are holding incredibly firm on their prices due to tight supply. And get this, they're doing it even though we actually saw inventory accumulate on Monday. They're waiting it out, expecting narrow adjustments at these high levels. Meanwhile, for the polyethylenes, LLDPE is at 8,333 and LDPE is up at 10,250. We're seeing the overall supply-demand relationship actually improving here. LLDPE is being heavily supported right now by steady packaging film demand, combined with those rising oil costs we just talked about. Now focus on HDPE for a second. It's sitting at 8,500 RMB. The absolutely crucial point here is that this price isn't just floating on macro trends. It's being directly propped up by specific planned plant maintenance shutdowns at major domestic producers like Sinopec and Shanghai Petrochemical. When you contract that short-term supply right at the exact same time that seasonal demand for agricultural greenhouse films is kicking in, you get incredibly firm price support. Moving over to vinyls and EVA, PVC spot prices are currently at 4,850 RMB per metric ton. Spot prices here are holding stable, maybe slightly soft, but look at those September futures at 4,496. They are showing real resilience. The expectation is that PVC will remain stable with a slight upward bias in the short term. And then there's EVA, sitting really strong at a spot price of 10,200 RMB. This market is fascinating right now. Just like the macro trends we discussed earlier, EVA is locked in a total stalemate. On one hand, you have strong, highly specific demand from the photovoltaic sector, combined with facility shutdowns that are keeping factory offers very firm. But on the other hand, general downstream demand is totally mixed. It's a standoff, and neither side is budging.
Now, navigating a market locked in a stalemate like this, it requires incredibly fast, razor-sharp data. I want to take a quick second to share a brilliant, high-tech tool from Polymer Bazaar that helps you cut right through the noise of these volatile markets and get predictions directly to your phone.
It's literally as simple as step 1. Step 2. You just take out your phone, open WhatsApp, and message the word prediction to their AI-powered chatbot at +11 9374 624 365. That is it. You bypass all the clunky web portals, skip the long email chains, and you get the full, detailed AI-powered market report sent directly back to your chat. And honestly, the best part? It takes exactly 5 seconds. In commodity trading, 5 seconds is literally the difference between locking in a profitable margin and missing the boat entirely. Fast data is king for sure. All right, pivoting into our next focus area, styrenics, PET, and engineering resins. Look at this uniform strength across the styrenics board. GPPS is at 9,550, HIPS is hitting 10,550, ABS is at 10,300, and EPS is at 10,050. Despite the fact that downstream demand is stagnant and procurement is highly cautious, these prices are holding. So why is that? Because the underlying raw material and styrene costs are so firm right now. The feedstocks are setting a hard floor that prices simply cannot drop below, no matter how sluggish the buyers are out there. And this brilliantly illustrates what happens when firm manufacturer offers hit a brick wall of sluggish buyers. Take ABS, for example. The manufacturers are holding firm on their $10,300 price tag because of their own raw material costs. But down the chain, in major trading hubs like Plastic City, the distribution channels are digesting material incredibly slowly. The result? Trading volumes get squeezed and remain extremely narrow. It's a classic bottleneck scenario. Looking at PET and the nylons, it's a completely divergent story. PET is sitting at a spot price of 7,600 RMB. Even though crude oil gains are providing cost support, limited end-user orders are keeping PET stuck in short-term consolidation. It's just moving sideways. But look at PA6, way up at 12,800 RMB. Here, those exact same crude oil gains are actively boosting trader sentiment and driving strong short-term performance. Meanwhile, its cousin, PA66, is suffering from plenty of spot supply but totally insufficient cost support, leaving it weak and highly volatile. Now check out this number. 14,300 RMB per metric ton. That's the spot price for pmma, and it's consolidating within a tight range, heavily backed by very strong MMA costs. Similarly, PBT is remaining incredibly firm right now. And it's not just crude gains supporting PBT, it's also being driven by environmental solid waste policies that are actively benefiting its key feedstock, BDO. It's a perfect example of how regulatory policy can directly impact spot pricing. Finally, wrapping up engineering resins with PC. Market sentiment here is incredibly strong right now. Why? Well, it comes down to intensely localized supply constraints. We're seeing low social inventory across the board, and that's compounded by specific plant maintenance at major producers like Wanhua and Lihua. Factory supply is super tight, and that's keeping sentiment high. So, we've looked at the macro trends, the microdata, the shutdowns, the bottlenecks, the whole shebang. The next step is translating all of this intelligence into action. To trade smarter in a market this complex, you really need direct access to the source. If you're looking to secure domestic buying and selling leads across India, you've got to connect directly with the relationship managers at Polymer Bazaar. Just call or WhatsApp the RM team right now at +91 93139 24365 or +91 93754 24365 to lock in the best deals and ensure material availability for your plant. For the full, detailed PDF reports of everything we covered today, definitely head over to polymerbazaar.com. And hey, if this breakdown gave you an edge today, make sure to like, share with your network, subscribe to the channel, and hit that bell icon so you never miss these real-time daily updates. I'm going to leave you with this thought today. In a market caught between surging crude oil prices and widespread plant maintenance, hesitation costs money. The stalemate we saw today is absolutely going to break eventually. The question is, with the data you have right now, how will you secure your next major polymer deal before the market violently shifts again? Thanks so much for joining me on this explainer. Stay sharp out there, and I'll see you next time.